The next subject is the fascinating one of Fibonacci numbers. Leonardo Fibonacci was a 12th century mathematician who invented a number sequence, part of which later came to be known as the golden ratio, 61.8. It is a fascinating subject, and if you wish to know more about it, then have a look in Wikipedia. For us, as Forex traders, the relevance is that the Fibonacci sequence is used in stock trading, options and Forex. And I'll show you now the tool that you can use, the significance of it, and how spookily accurate it can be as an extra form of support and resistance. I explained briefly how the stock market and Forex traders use Fibonacci, and I'm now going to show you how to use it. If you go to the top bar on MetaTrader, find the F button, and when you put your mouse over it, it becomes a square. Left click on it, and then bring your mouse over to the top of the recent move. Now I'm going to go back to a move here, and you then left click and drag the mouse down to the bottom of that move, let go, and we have now fibbed the top of a recent move to a bottom of a recent move. My fibs are different. I do my fibs upside down. So if you have just unpacked your new MetaTrader, you will find that this first line says 78.6, the next one will say 61.8. There is a reason why I do mine differently, and I'll just show you how to make those changes first. Double left click above the Fibo line and right click, and up pops Fibo properties. The zero line stays the same, but the 38.2, for example, will now become 61.8. And the way to change that is point your mouse over the description section, double left click, and you can now go in and you can make your changes. So I want that to say 61.8. Another thing you will notice, I have got percentage and dollar after my fib numbers, and the reason is down here you can see that you not only have the fib level, but you also have the price showing, and it's very useful when you're trying to calculate where price is likely to react. If you can see the price here. So if you want to do that, leave a couple of spaces after the figure and simply add percentage dollar. I've already changed the rest of these. If you wanted to make any additions later on, then you simply go up here and click on this and click add. But we don't want to do that. We're going to leave it as it is. Click OK, and the parameters are now set. And as you can see, the price is showing for each of the levels. The reason why I do it this way is that often you will find from a move on fibs that price stops after a break and a pullback at 121.4. Normally this figure would be down here. So that is the reason why I do it. It's also the reason I was taught, and I'm just in the habit of it. But look how accurate Fibonacci can be. This move came up to a recent high, pulled back, price stalled at the 21.4 figure line, it stalled at 38.2, it bounced off to the pip off the 50% fib, and it stopped at 121.4. Therefore, it is another tool in the box that you need to consider to use. I do use Fibonacci. I don't use it all the time on the longer time frames, but I am aware of it, and it is often spookily accurate. Now, many new traders are never sure where to put the lines, where to put the tops, where to put the bottoms. The thing is, with most of the things in Fibonacci, same with trend lines, you are simply trying to find the area that most other people in the world are looking at. To go to the 4-hour chart we've been following recently for this Euro USD in a channel, it's now at the crucial area of support and resistance intersection with the trend line, as we discussed earlier. But what you can see is that just below here we have a 50% fib, and price has bounced off it. Now, on the subject of where to put the tops and the bottoms, some people would have gone from here to here, and on that occasion it's 61.8. You can see here how important 38.2 was up here, and you can see how price then bounced off some more support and resistance. But it's not 100% accurate, as nothing is in Forex, but the way to play it is just play around and have a look and see where price reacts the most. All you're trying to do is copy what everybody else is doing so that you can see the same things. This is the recent move on the British pound. Once again, this is the channel that we were looking at before. This morning we were looking at a pullback. This time price pulled back to the trend line and the 61.8 fib. Yesterday it pulled back to the trend line and the horizontal support. And what you could have used your Fibonacci for yesterday would have been to place your stop below the fib level. Because for me, until price breaks 78.6, then the trend, in this occasion, the trend is upwards at this moment in time. Until it breaks this 78.6, I am only looking for longs, other than if we go for counter trend up here again. So, the relevance of Fibonacci is that it is support and resistance. Lots of traders use it, and therefore you need to consider whether you're going to add this to your arsenal. If we go further back in this recent British pound move up this channel, and we went from the high here to the low down here, or we could even go over here to that high. You go from the high here to there, and what happened? Price again, we had the trend line, we had the 50% fib in the area. The Swissy, at the moment, we're in a downtrend, so therefore I have fibbed from here to here. Price came up, stalled at the 50% fib where it's sat at the moment. Price is currently struggling at the 61.8. So for me, in terms of a breakout, I was saying to you earlier that I would only start to look for a breakout once we've cleared up here at 9100, and 9109 happens to be the 78.6 fib. So until we break this area, for me, I am still interested to short, not to long. This is the dollar yen recent move, and this is on the daily chart, and we've taken the high to the recent low, and price at the moment is struggling at the area we were looking at for a bounce trade anyway, of 8200. And remember, the charts I showed you before, we had multiple reasons to take a trade at 8200. It's currently 20 odd pips in profit, and on top of the horizontal and trend line support, we also had the psychological level whole number and 61.8 Fibonacci. In other words, we had multiple reasons to expect price to bounce at that area. This is the recent move on the CAD, and the recent move on the CAD on the 4 hour, it's been very choppy and it's neither up nor down really, but if we say this move was an up move, price came back down. Where did it stop? To the pip, 78.6, and that 9900 line we were looking at a couple of days ago, where I was saying to you I would not short in this area because of the whole number, because of the fact price had reacted here before, and I also happen to know that 78.6 fib was just below it. Does it work all the time? Of course not. Nothing in Forex ever works all the time, and if you could rely on it constantly, then there would be no money to be made in Forex because it would be far too easy. Here on the Euro USD on a daily chart, you can see how price came down. It struggled around 78.6, actually closed just above it. Finally it broke. You start to think in terms of shorting because we broke 78.6, don't you? Well, before we dive in, just think back to what we were looking at the other day and whole numbers and support and resistance lines. 1300, a huge psychological level on the Euro USD, was just below this 78.6. I say just below, there was 80 odd pips here, but that would have kept you out going short, certainly anywhere around here, because there was a strong possibility of this bounce back. Fibs are valid, fibs are important. You choose to use them if you wish. Personally, I do so. I don't place all my faith in fibs, but I am constantly looking for as many reasons as possible why price will react in an area. So we now have in our arsenal support and resistance, which is crucial, and trend lines and channels. We looked at correlation, and we now have Fibonacci. On to the next subject.